Okay. Well, let's have a look on the pound first of all. I mean, as you know, anyone, this, we've got in earlier around here and come up to what I believe to be double tops, and then it just carried on. It just carried on. It was this nice move that this sort of retest here where it went long and it sort of jigged down a little bit and then shot up, had a pullback, shot up again, and this is where I saw this candle. I thought, you know what, this is probably going to come back down, retest before continuing, and it didn't. It just rocketed, which was unsuspected, as it were. But nonetheless, capitalised on some of the move, and again, I just literally closed the trade, which I probably should have left again, but pulled back to the 20 and went up long. But I just thought, I'm going to bank that 30 pips, just in case it gets to 139 and turns around while we're on the call and sort of miss it. But it's definitely just going to keep sort of buying the pullbacks, as it were. I mean, if we look at this on the daily, remember earlier on when we started talking about it in the group, we were basically under here. We were under this 200, and what I suspected was going to happen, because we had this sort of bearish day and didn't break, but it stayed in a very, very close volume, and it's a very small volume day in comparison to the previous two bullish days. I just could see this was going to rocket out, but I did not expect it to come at that time. I was sort of expecting something to come out tonight and then tomorrow give us that big break, or later on this evening, wake up to it broken and retesting or something. But now we can see clearly that there's areas, 140 to come in line next, and hopefully make its way back up to 144, which was one of the last areas that proved to be a lot of support before it was broken. So depending on how this news is developing and getting some kind of a deal done, then I just see it going to continue for the next few days and week, and hopefully get some more volume days, and just keep taking those pullbacks for the longs, or just leave it if you're able to. Just not always in a position where I want to sort of set and forget, especially when it's volatile. So it's looking great. If we look on the higher time frames, do you know what? I do agree with you. I literally just think this is based on potential news, not solid news and not solid information yet. But nonetheless, when there's momentum in the market, as a sort of trader, it's good to capitalise on it, and it's good to find ways to take money out of the market when it's giving us the volatility. So this is all we was looking to do today, and what I'd like to achieve for the next few days. But we will see. I think tonight, let's have a quick look on here and just see if there's any updated news right now. This is interesting. 5:12 an hour ago, but Brexit will be delayed until next year, even if a deal is reached tonight. Closing in on the draft deal. This is what sparked the big movements. But yeah, report of imminent Brexit deal. Way too premature, that says, but indicators that we're making progress. So it's just looking good in the short term. So let's see. Let's watch this space. Let's see if momentum continue. From a technical perspective, I would say from 126.855 for just under 1,000. Call it 900 pips. So it's probably going to be 900 pips from here. So 129. Let's see, 139.3, 139.4. it could have well done its third leg, and therefore could look to retrace back down before any further move back up. So yeah, I mean 139.5 is an area I had marked of interest, and you know, just at 140 it could have spiked up and just come back down, but there is some interest as a medium price there. If we look on the monthly, comes a bit clearer. So here we've got, you know, tests, more tests, all at 139.5 region. So yeah, I mean that is where I see the near-term resistance. But you know, we do get a bit of a pullback, and some good news. It could be cause for long. I mean, we've sort of got this sort of double bottom scenario here. So it could be looking for you know, a big move to the upside for the pound, which I think if this deal is being done, etc., then we can hope that is the case. But nonetheless, it's been a good day. I haven't really looked at any of the other pound pairs, in honesty. Just pound yen, because I like the way that it moves. Tends to be pretty predictable. But yeah, you know, technically speaking, it's been looking good and done the job today. Is there any other pound pairs or any other pairs that you've looked at, or do you want me to go through gold? Okay, so gold, my favourite as always. So this morning saw an opportunity for long, and what happened was obviously this impulse move to the upside, and then we had the breakdown and retest, which worked out fine. I come out at 94. I wasn't expecting it to break, and you know, it just did. It pulled back and it carried on going all the way up to 98. What I had my eye on was the 4 hour and the 1 hour for the 98 region, but as I say, I missed it because I've been so busy, frustratingly. But which was here, you know, we've got the 98 here, which lined up with the 200, and we'll show you the 400 and the daily. 400 bang on the 200 again, and the daily is on the daily 20. So they were all lining up to be acting as a good form of resistance. So I had my eye on it, and I missed it, and I thought, you know what, I'm not going to jump in and just hope on a whim. I'm going to break down what I've done there shortly, but once we had the breaks here and the testing here, I just thought, much as I could see it breaking to the downside, I just was paying more attention to pound at this time. Then it broke down, and it was here I was looking for an entry, and it just didn't quite make the 5 minute 20. It did once it got to here, but didn't capitalise on that because it was already capitalising on the pound yen again. But yes, I mean overall, it's definitely looking bearish. We spoke down literally exactly to this trend line. Now, it's obviously a long-term uptrend, but this channel is you know, it's almost a bull flag. But we've had 1, 2, and I think we might see a third touch lower before we get the breakout and continuation. So I am overall obviously bullish, or you know, I tend to be with this pair. 1480 is where it's hovering at the moment. If we do get a break below, move it down onto the low time frame, because most of this was done on the 1 hour. Let's see if we can zoom out and give you a better picture. Is we've moved top to the bottom, top, and now hopefully moving back to the bottom. Now this is you know, acting as a sort of support area, but after this kind of move, very much expect to see some kind of pullback and breakdown, retest, in continuation. And I think if we get a third touch down here somewhere, that will be our course to look for the bull run. It's sort of in the middle of nowhere at the moment. But yeah, I mean, the only thing I'm cautious of is if we do continue back up to the upside, where the top's going to be. But overall, you know, if there's money flowing into the pound, then it's coming out of yen and other safe havens, and therefore indices. I mean, indices have looked really strong, so everything is pointing towards a bearish gold, which, you know, if we get some kind of nice pullback, you know, even if we get a breakdown and then the pullback is up to here, we're looking to take that. I mean, end of last week after the massive short we had, that was a great move, 100 pips to the downside Friday. Very happy with that. I was expecting to see some kind of pullback up to 14.80 and breaking down then, and we got all the way up here. So that is what sort of threw me a little bit. But you know, now we're back down at this level. Likely continuation to the downside. So that's what I'm seeing. What's your thoughts on it? Is there anything you want to add to that, or anything that you're spotting and want us to review? Yeah, moving on up still, pound yen. Again, should have left it. I will learn to do it. See, it's just breaking down from that 80 level. What's your thoughts? Where's it at? Along at that point. Yeah. Yeah, I mean, to be honest, with the pressure and, you know, the move it had done to the upside, it was only the fact that there were so many higher time frame confluences looking to the, you know, act as resistance that I favoured the downside. It could have gone either way. You know, it really could have. Yeah, and you know, I must sort of agree. Like I say, I'm typically always biasly bullish with gold. However, you know, I've done a lot of shorting of it recently, and it's played out in favour because we just, you know, playing to the technicals, shouldn't have a bias. But yeah, I mean, overall bullish. But if we can see a breakdown here and get a run to the downside, then you know, that'd be one hell of a move to capitalise on. But this could just be the bottom. It could be that we now re-attack to the upside. But as I say, temporarily, where money is coming back into currencies, you will see that you know, gold will, or suffer, and money will come out of the safe havens for that reason. Pretty much where we are now. Yeah, I really see if we break this 76 region, we break this sort of 77 is that low point there. We break that, get some kind of a retest back around, you know, 77 to 82. That could, you know, that would be a really interesting place to be going short. I think, especially after this drop again today, we get that breakdown move. This sort of 83 mark is going to be the top. That's going to act as the new resistance. You know, we've got some areas here up 87s, 88s, 89. And if we've got a pullback to there, then we'll definitely be looking to go short again. But yeah, it's just being patient to see if that happens. We'll know by the time we get up in the morning. This would either made a move back to the upside, which is certainly worth considering short, or it's already broken. and hopefully giving us a retrace to be able to get in the short there. Yes, I definitely will be waiting to see it break and retest on a lower time frame. So it may look something like this. Let's just do a little drawing. So it may be that we get one candle there, another candle there, and then we start getting candles to the upside. And you know, if we can get on the lower time frame, because if we have a look on the 5 minute, what it should look like will be another leg lower, maybe the 70, something like that, because it'll be a similar kind of distance, and then pull back up to around this region where either we'll get the 20 or the 50 as a place to reject from. But you know, the way this is looking right now, I can see this forming a bit of a double bottom or pulling back to the upside. So maybe we're going to get lucky. I mean, that 1 hour 20 lines up with the 5 minute 200. I mean, the daily, again, you know, it's pulled down, but we've seen the markets recover from lows like this without any problem. So let's see, tomorrow I may get a pull back up to the daily 50, which again is around the 88 mark. There's a lot lining up around 1488. You know, there's a lot of sort of support, which will come resistance here as well. So I think if we do get a breakdown below and a retest of this region, then great, we'll look for shorts. But if we don't, if tomorrow we find we're getting a pullback up to 88 will be a very good short. And you can keep it tight. I mean, you know, what I tend to do, and this is why I like to be on the chart. So let me just break down an example of the 5 minute, because someone was messaging me earlier about it, saying, look, I think it obviously works what you're doing, getting some good results from it, but how do you manage to trade? Do you do 20 pip stop, blah blah blah? I actually don't. So with a 5 minute, all I'm doing is when it's getting here, watching the close, as I've told you before, you always get multiple reactions. Wait for the second one, go short. If I get 10 pips above and it closes, I'm just cutting it out. So I'm giving away hardly anything when I'm trying to do these scalps, and I am taking not a lot out of the market, admittedly, not as much as I should be. But this is what I'm trying to improve on, is taking that short, moving it to break even, and then just letting it run. You know, maybe locking in some profit along the way, like what I did the other day was locked in 20 pips and let it run, and it actually turned around when and stopped me out, but I still had 20 pips profit locked in. But again, you know, you can come out, get in back on the retest, but you only need to come out, you know, would have been maybe here, you know, if it closed out up here, would have been out, and then seen if it rejected here. And again, so of those 3 potential reversal areas, might have given away 1% in total, instead of just leaving it to run and then having to recover and blah 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 everything else. Because if I see something on a higher time frame, think, you know what, it could reach up here, I can just wait. You know, I always accept a little bit of risk. This is why I like to be on the button, to be able to just shut it off if it's not going the right way, and then get back in. But you have to know and accept that, you know, what you're looking at on the higher time frame is a short move, and therefore take your opportunity, so it's this one, or this one, or all 3, to get in short. And I like to sort of be, I'd rather be in the market and, you know, see it go against me. I've done it enough times now that I know the numbers play out. And you know, there's no point in me just saying, here, I'm just going to do 20 pips because then 84 is going to be right up here. You know, why am I going to let it run to there? Because it's probably going to turn around there. It doesn't make sense to let it stop you out just before it turns around, in case it does. And then, you know, the other argument is, oh, you could do a much bigger stop up to here. But I'd just rather not. I'd rather just, you know, give away the 10 pips or 7, 8 pips, whatever it might be here, and just try and get back in. And then, as I say, just I'm just trying to let it run. Friday worked out really well. You know, it was a really good day Friday. Banking over 100 pips, could have been more. Which is the only thing I keep finding at the moment, is that I'm letting the markets, you know, keep money away from me, not coming out at the very best times, and that's something I'm trying to work on myself. And I like to share with everyone, because you know, we're all human, we're all always learning. And I hope that my experiences help you in what you're doing yourself, because I can guarantee you every emotion, everything you've done, right or wrong, I've done several times myself, and it's taken me a long time to get to, you know, a profitable, consistent stage, which, you know, fortunately has been a little while now. But you know, there's always learning, always learning. And you know, last week I was battling with, kept, you know, seeing it in profit, leaving it break even, and swiping down and getting stock back out. But you know, if we use this pound yen as an example from earlier on, it's in here, lovely move, you know, absolutely lovely. Could have had 200 pips banked, but you know, come out here where I saw it being a top to previous, and that's it. But you know, I'm glad I got back in and come back out. Again, it could have been left, but if I can't have full attention on it and be able to press the button when I need to, it's just a risk, you know. And there's so many opportunities. This happens day in, day out, week in, week out. There's no rush necessarily. There's no need to be greedy, and I've just been so busy with multiple things at present that I haven't been able to give trading the attention I would like to. I'm always sort of on the phone and trying to. I must admit, it's been a little bit difficult to keep on top of it, making more wrong decisions in terms of, you know, doing that break even moves, and like even like earlier on, you know, just think to myself, you know, I need to have attention on the webinar, and it you know, it can affect it, but fortunately, you know, much as it is one of my main sources of income, it's not my sole, and so I do need to look after other things as well. For now, one day maybe I'll be left alone when I sell the companies. But until then, I have to do everything. But yeah, hopefully my experiences are helping you. Is there anything you're going through in your own trading journeys that, you know, I can help with, or anything that you want to ask, or, you know, say that I might be able to put another spin on for you? Okay, well, that's an easy one, and you know what? In some ways, I admire you for it, because you're able to do something that I'm not, which is essentially to leave your trades and see them play out. But what you did in not closing it was probably because you might not have had that plan beforehand to make sure that you did close it. So did you? I mean, let's have a look at it. So we're going through the trade. Did you have a set target already? At what point exactly did you enter the trade? Okay, so let's say you did it here, and here, for example's sake. So we've got, let's just do a little drawing. So let's say we had one by there, one there, and one there. Did you, okay, great. So did you, at this point, set stop losses for each one when you opened the trade? Or did you have them mentally at least, if not physically set? Okay. Well, let me show you what I would have done, and let's see. Okay, I see. So you're just looking at a longer point of view. So let's take that into mind. Let's say you are building up a longer term position. Then perhaps we're going to do stop 1 here, stop 2 here as well, and stop 3 here. Now, did you have a take profit in mind? Okay, perfect. Thank you. 15.10. Let's draw that up here. Up here. All 3. So first of all, you know, your risk to reward is great. I don't even need to measure them there. You know, you're looking at about 4 or 5 to 1. If you're working that out as a 1%, if you're not, you know, you're like me, you do sort of 2%, then that's fine. At least that's looking good to the upside. Now, all I would say is, even though you had that target, you must always think about protecting the capital when you're in a trade. So there's got to be some form of management. Now, as you can see clearly here, we had the breakdown. Yes, it did come below, but you know, we would have had some sort of stop here, or you know, you're thinking, you know what, this is longer term. I'll let it play out a little bit, which is fine. And then it's moved to the upside, and then second one. But you see how it's respected that 20 EMA. So there's different ways you can manage a trade. One can be that I generally use the 50. So if I will let it run there, and if I see it break the 50, like here, that would be my exit. Now, if you take my strategy into perspective, that means this one still would have been in profit, but these two would have been break even and a loss. Let's say, you know, so maybe end up with a little bit of profit. But if you had on this moved this one up to break even with this trade, when we see this one move up, moved it back to break even, still wouldn't have been stopped out even with the next pullback. And that one, once you start seeing them all with a bit of momentum, move them all to this break even point. It's zero risk, and you can let it run. So then, instead of your risk being here, your risk gets underlined here, and you know you're in it for free. Now, visually, we're going to be seeing this going off and think, great, the market's always going to pull back, you know, and we'll just hope that it doesn't come below. So this is where the management comes in, that if you're going to run a management on the 5-minute 20, then great, you know, you would have left it. You would have exited and kept some profit, more profit from this one than the others, but nonetheless profit in all positions. If you do what I did, you would have ended up probably out of break even. But if it carried on to the upside, then it would have played down. But if you've got those larger targets in mind, then we need to look at the higher time frames, because the point I'm trying to make is it makes sense on a lower time frame. We've got the management, we've got the stops, we've protected ourselves, but does the higher time frames tie in with that? Now, let's have a look, because especially the daily, one of the key ones. Now, as much as overall, as I mentioned, it's bullish, you've got to remember what you've got as a potential cap. Now, this is why, you know, I use the 20 and the 20 EMA quite a lot, no matter what the time frame. But you always find it tests. Even when it breaks really high, it comes down and checks out. Even when it goes the other way, it comes back, and you know, if there's movement through the 20, even if the 50 isn't, there's always movement on the 20. E.g., when we're having this big bull run, there's always movement on the 20. No, that doesn't matter what the time frame. So if it's moved a lot, you can expect it to pull back. And this is what I say, you've just got to think about a little bit when you're thinking of your targets. Where could the potential turnarounds be? So today was on the daily 20, which if you then start looking lower and building a story, that also lines up with the 4 hour. Also lines up with the just above the 1 hours. Now my target's up here, but if I'm looking at this, we've been playing underneath that 200 EMA for some time. So should I wait for a break? Should I exit there and then look for a break and retest? These are the questions I tend to ask myself, and I do tend to come out when I see a sort of sign of resistance. Now that could have gone and played more to the upside. I mean, just looking on the 5 minute, you've got no reason to think it's going to turn around. And this is the power of the multi-time frame analysis. It's the power of looking across all the time frames and thinking, do you know what? This, much as the lower looks bullish, longer term I've got a long-term view. Where's the rules in it? What am I going to do? I mean, if you're looking for a target up there, you could have had to stop down here, and in the end it would have been taken out. And a lot of people, I bet, got taken out today. I can put money on there would have been a lot of people, holding longs and thinking, this is the move to the upside. But this is where we have to remember the market isn't going to go where we think. It is going to do what it wants to do, and then we have to act on what we see and what happens. E.g., if it gets to here, do we come out? Or if you see a turnaround, do we exit? Or do we just hold it and see what happens? Now I'm going to go back a bit low so we can see our marks. Because this is the point where, and I tend to do this a lot. So before it even got to that 1 hour, on this 5 minute, we'd have had this break, would have been back up to this high where it reversed before. If I'm being brutally honest, that is probably where I would have come out. If I was even holding these ones, I would have come out here and then seen what happened. And it would have gone further up, and I would think, oh, do you know what? It's carried on. I could have held it longer. But then if you do look to them other time frames, it almost tells you that was always going to be some support, and therefore that would have been the place to hold it to if you're happy holding longer, and to exit and see if it breaks or retests, rather than letting it come all the way back down and take you up either some or no profit. And in my case, probably would have been no profit. Much as I see things turn around, I instinctively do close it out because I don't like giving it back. But at the same time, if I was really planning and I had my plan before, that's what I'm going to do, and then I'm going to leave it there and I'm going to exit on the break, I would have come out with very little profit. It would have only really been this trade in profit. But this is why sometimes a value target helps, or whichever. So what was you thinking of using for your management? Was it, because it obviously wasn't stopped as a form of management, so was you looking to do anything like the EMAs or anything else? This is just to help you build a whole picture, because no matter win, lose or draw, the important part is just having a plan and sticking to it to see how it plays out. Because over the long term, you'll see what works more consistently. Okay. No, well, like I said, it doesn't have to be the fact it's necessary. It could have been like I would do with the 5 minute 50, or you could do it with the 20. But yeah, I mean, because of the higher time frames, and I had the bearish view, I was looking at this area as a point of it turning around, and so that to me would have signalled the point. Okay. Yeah. Yeah. Well, I mean, it does happen. You know, that it does happen, and you know, like I said, I've had a lot of it recently where it's come back down to where I've moved it to break evens and took me out for nothing, and then carried on. Very very annoying, even more annoying than it sort of going wrong and you sort of not thinking about it. Just knowing that if you left it, sometimes it works out. You know, this is where I say about the management of the ESLs and what I do, and I'm looking on the 5 minute. If I see it just 10 pips, you know, it's holding below, I'm just going to cut it and I'll wait for another point to get in. But that can be really effective, especially if you're just looking on the lower time frames. And even if you did it here on these ones, you know, no matter where you got out, if you'd left it to there, if you'd see it just hold, you know, start breaking down below, it could have been cut. But you have to be actively on the charts. This is the only difficulty when it's like that. So, you know, and that's why I do prefer to be physically in front of it. But yeah, I mean, I would just say perhaps, you know, try and implement a kind of management. In terms of the ones that have been getting hit on the stop losses, where have you sort of been entering, and where have the stop losses sort of been? What's been your reason for the entries? Has it been the 20 or the 50 or something completely different? Okay. Okay. I mean, yeah, I would say that the 30 to 50 is probably a very generous stop. Yeah, I mean, I would say that's quite generous. And this is where perhaps you know, I think I understand your situation, that you need to be in you know, you can't always be on the charts, etc. So it's a bit different, and you know, you do need to be a bit wider, and this is where it pays to be doing your entry on live analysis. I'm just getting rid of these. Was I forget? But yeah, it's always difficult to have the prime thing. I mean, like here, you can't say today, especially if you was looking at short, for example. You know, you could have entered here and had a 50 pip stop. It doesn't matter where you would have entered, that 50 pip stop would have been taken out. It's gone from one to the other. You know, swung left and swung right again. Okay. I mean, yeah, if you're active on the charts and you can be on it, then, you know, maybe try and trade it more actively. I mean, like, let's just take it from here as an example. Let's just say you saw this break and retest as a chance to go short. It didn't go against you, you carried on it coming down, great. Then you came out and you see it start reversing. Here you've done the same thing again and then held you know, above. It's nice and tight, nice and close here. So to be honest, you know, you wouldn't have needed to close it out here. It could have been left because that's only like 10 odd pips anyway to there. But then it's not. It's going against you here. You see a break and hold above here. You exit. Okay, that would have been 20 pips out. Then you've got to keep the bias. What you'll find is where things will always go wrong is if you go from being a short to trying to trade long, because if you stick with short, and you know, if I mean, what I would have done is I wouldn't have been going short here. Just looking at this chart, you know, obviously the high time range on you, and I was looking for a short up here. If we're just taking this chart and this as an example, your 50 pip stop, you know, wherever you're getting it would have been taken out in the end. But if you're cutting it short earlier and then waiting for another opportunity, so another breakdown below and retest of the 5 minute, e.g. here, then it's going to work out, you know, you would have only given away 20 pips instead of 50 pips, got back in short and at a better price than you did earlier on. But you have to keep that bias, you have to keep it the same, you know, you can't, like I say, suddenly switch to going long. Yes, today it would have, you know, could have gone in your favour, but you would have gone long here, you know, on switching it up, and it could have broke down here, and, you know, say for example what I would have done, yes, if I had the 30 to 50 pip stop, then that would have gone in my favour and would have been a nice bit of trade. But I would have seen that break back down below, exited the long, and then it carried on anyway. So, you know, that wouldn't have worked for me. But you have to make it work for you. And even if you do that 50 pip stop and it gets taken out, let's just say it's up here, then you need to sort of revisit it to re-enter if you've still got that bias. But that's where it needs to be confirmed with the higher time frames. And it's really, really powerful looking on the higher time frames, because, you know, just looking at this, you think, well, what the hell's that turned around? There's nothing up here. But, you know, we go to those 4 hours, 1 hour, the daily, all of a sudden we can see actually there is a resistance area. You've got a strong EMA. It, you know, it could be a good point to turn around. And again, you know, you might be stopped out 50 pips. You can do another short here with 50 pip stop. Yes, you're risking 100 pips total, but that whole move today has been 98 to 78, I believe. Yeah, 200 pips. It's still done the 2 to 1. You know, you still kept it risk managed, because no one's ever going to get all the trades right. No one. I don't care what anyone says. I've had trades where I've done 10 right in a row. Great. I've also done trades where I've gone 10 wrong in a row. But the difference being, if your wrong trades are, you know, only 10, 20 pips, but then your right one is 50, 100, it covers up a lot of those losses and they become meaningless. You know, even if you was only getting it right 25% of the time, but you're giving up 10 pips every trade, you've only got to have, you know, a 25% hit rate, but taking 40 pips at a time to stay at break even. So, you know, it really is about the management side of things and keeping a bias, because, like I say, if you keep thinking shorts, even if it's here and it goes wrong, you short it again up here. You know, I mean, look what happens. It always reacts with these EMAs. Doesn't matter how far away it gets, it always reacts. So it's never too late to get into the trade. You can always get back in. Hence why I'm just popping down to see where pound yen was at. Might be back down again, giving us an entry. But yes, I use the 5 minute 50. Yeah, I mean, just because sometimes, if I'm managing, you know, and I'm, you know, leaving it for a longer term, yes. If I'm looking at it short term, like what I do most of the time, and when I'm buying off the 20, if it's close like this, I like it, because, you know, even if I go short here and it moves up to these, it's you know, like 10 pips, not even 10 pips. You know, I'm happy to leave that. But if you look at an example like where it is down here. So let's just say now, you know, you go short and then it holds above, you exit, okay, you've given back 10 pips or so, but then it's moved another 15 pips up, and then you go short, and then it works out, you're in at a better price, you've recovered and in profit by the time it gets back to where you are, and it can continue to the downside, and then you can protect yourself with a break even. But even if you do that 3 times, but then, you know, so you've given away 10, 20, 30 pips. Imagine going short from here down to 80. That's 90 pips. You know, you're still going to be up 60 pips. And it is just about those numbers. You know, you've had 3 wrong, one right, but because of the size of it, it's nonetheless, you know, it's still profitable. But yeah, that's why I literally, let's just take it right now as a prime position. I could go short now, and then if it holds above here, above this 20, then I'm exiting, giving away some money back. To the 50, I'm re-shorting, and if it holds above, then I'm re-exiting, and I'll wait for the 200. If it doesn't go all the way up there, and it breaks back down and retests, I'm going to do it again. Because if I'm looking at the higher time frame, I know you're probably sitting there thinking, well, you could just keep on doing that all day, and it could be wrong. But if you look at the higher time frames, and we can see that clearly this has been in a downtrend. You know, what other EMAs can I go on? If it breaks that 50 at 82, then you know what? Maybe it's going to go up to the 1 hour 20. Does that line up? Yes, very likely. Do you know what? I'll wait for that. And the higher the time frame, the stronger the EMA. But if you take here, for example, you know, it's been a lot choppy. It's very choppy either way. So you have to take that into consideration. You might give some trades back. But if you're keeping the same bias, then, you know, you're going to get it back. You'll be able to make it back. The market doesn't move in straight lines. So, you know, as long as you've got that a longer term bias, say long term, doesn't have to be weeks and months, but even on just a slightly higher time frame, you know, like this big 4 hour candle on the 5 minute, it just looked to be coming down. But even though it's pulling back on a smaller time frame, I'm looking at that and I'm thinking, well, you know, bears are taking over. I'm definitely going short. And even if it doesn't, let's just say that you know, this is the 4 hour, but let's try and draw the 5 minutes. Let's use this. Let's just say I get a 5 minute pullback 20s here, and I go short, and it goes against me. It carries on going up, and all of a sudden I'm here. I'm back at the 4 hour 20, and I go short again, and then that works out. Then great. You know, I'm still following that bias. I know that, you know, it might recover a bit of this, and if it does turn around, and it's suddenly, you know, engulfs that, then I'm not going to go short then on the lower time frame, because I can see clearly on the higher time frame that it's turning around. And it's not something that you can just suddenly look at and get. So don't at all put any pressure on yourself to think, why don't I see that or whatever, because that is what takes time. It really is what takes time in the markets. It's not something that you can look at overnight and think, oh, I've got this is how it works. It does take time. It takes time to recognise that, but like I say, you have to stick to the bias. We've had 3 touches in this channel now, so you know, I expect a pullback. I would really like to see 88 come into play, which lines up with a few things. You know, it's even dropped a little bit now. It's 1 hour 20, but that would be a good point for a short. And like I say, I use the 5 minutes when there's been momentum. I use it in the morning when we see the breakout, and then I see if we get a sudden momentous move, e.g. earlier on, you know, big move to the upside, wait for a break, for a retest, and then carry on. You know, I use it as a sign of a short-term pullback. Yeah, but this is what I mean. You know, that this kind of, if I've gone short there and it's here, I'll be closing out. You know, I'll see where this closes. If it closes above, I'm closing out and giving it back. And you don't need to wait for it to close. If you just think, you know what, it's obviously going up to this 50. You know, take a judgment call. If you're happy with that 20 pips, then fine, and see if it closes above the 50, then fine. You know, because it can, like I say, tap it and carry on to the downside then. But that's why I prefer getting into the trades when they're close together. And they're further apart, it's fine. But you know, just remember, you can, you know, it's all about getting the best entry price, because that's where you're going to get the reaction from. You know, and you can see how sort of in and out it's been. You know, when it's meaningful. And the reason why I say, you know, I'm happy to close out below is because when it means to do a move, when it means to move to the upside, it doesn't break back down below. You know, and when it does, it's going the other way. You know, here, you know, this is an example of it carrying on. However, messing up with the EMAs. You know, what would have happened here is, yep, taken along here on the retest. It's broken down below. I've come out here, let it do its thing, then get back in on the retest and recover. Yes, 100%. It is very difficult when it's choppy, and that is why, like I say, if you're doing it after a move with a lot of volume, e.g. this one, you know, this one there isn't a lot of volume. This was a volume move, but it just didn't work out. You know, that just didn't work out. But this volume to the upside, then it worked out. It did play out in the end. Again, here, look, all of a sudden we're consolidating. This is a morning move. Volumes come in, volumes in the market, pull back, retested, and carried on going. You know, and it's the free touch rule. So in the mornings, you might find 7 o'clock. There's a first touch, so there, fine, enter. Second touch, enter, but beware, it might tap the 50. But I after it's done 3 touches, you know, I tend to leave it. If we look at this morning was somewhat similar. So look, we broke, had 1 touch, 2 touch, you know, 3rd touch it didn't work out. But you know, just when you're looking at a momentum move, try and catch on the 1st or 2nd touch. You know, this is what I mean about this very likely going to hit this 50, and then the question is going to be, do you know what, are we going to get a rejection or not? Obviously, I'm waiting for the higher time frame for this one. If we get a rejection here and it breaks down and then retest at 20 again, then I'll look for a short. But I'm more likely this is going to break this and head up to 88-ish. Pound yen slowing back down. And yeah. Now, hopefully that has made some sense. Anyway, hopefully helps. You know, at any time, especially if you're in front of the charts, if you're looking at trade, or you know, you want another pair of eyes, just, you know, message saying, right, what do you think of this? I'm always happy to help, and you know, I want everyone to succeed, get where they want to be with trading, and hopefully, as I say, my lessons, good and bad, will will help others as well. Is there anything else you want to have a look at quickly before we call it a night? Any other pairs you're looking at? I must admit, I've only been interested in the pound pairs, gold, at present on my side. Okay. Well, you know, so I'll be keeping an eye. Be keeping an eye for 88 on gold, or you know, or 80s if it breaks to the downside and get a retest. Yeah, and the pound yen. Just because it's getting, excuse me, because it's getting late now. Not sure what momentum will continue. I mean, yeah, I mean yesterday evening it just sort of broke down after another bull run. So certainly be interested in seeing this pullback to 1 hour 20. Let's see if any news comes out this evening. Oh, she's still holding the position. Still got that long holding on there. Okay. Okay, fine. I mean, yeah, I mean, you know, if you're happy to, and it fits with what your trading plan is, I mean, I would just put the stop below, you know, below this low perhaps, just to cover something somewhat, you know, even below this low, just so there's something covered. But yeah, I mean, I'm hoping to see 88. I mean, if we get to 86, because this is obviously going to creep down this 1 hour 20, maybe around 86. That would be a good time to close out, in my opinion. Which hopefully we'll get to. One thing I have noticed, and I was looking at the 100 earlier, the Dow and the DAX went nuts, and the FTSE didn't. The FTSE just didn't keep up with the Joneses, and I find that odd. I was looking for an entry to go long, thinking it was going to just, make up the differences all of a sudden. But I think it's really waiting on this bit of news. So we'll have to kind of wait and see. See if anything's come out on here quickly. Yeah, we go. Yeah, still. Yeah. Yeah, I mean, I totally agree. It's just, when the going is good, trying to make the most of it. But no, 100%. There's going to be something. The way the market's doing it, this is why, again, like what we saw last night was a big pull down. Yeah. No, exactly. I'm sure there's going to be some negative statements that come out and some comments that people aren't expecting, and all of a sudden, there'll be a breakdown in price, and then a bit of good news for market to continue. So yeah, I'm hoping for that to happen. But like I say, I think this 39.5 will be cap at present. But yeah, we'll see. We shall see. Exactly, and that's why I say it will keep rallying until there is bad news. So we'll make the most of that. But yeah, suddenly it does get a bit of bad news and drops. Then same thing. Be prepared to short it. Get on the back of the momentum. This fallout, this is not really moving much right now. So obviously the volume's left the market. Expect some kind of a retrace. Hopefully, even if it's down to 138, get along in there would be great. 1 hour 20 preferably, but yeah. Let's see what this evening and tomorrow brings. News for tomorrow. As quickly as the last thing, we've got pound CPI. That could be negative, and Carney speaks 2 PM. So could be a volatile morning depending on what this data says. Same with the dollar and CAD as well. Thursday, Aussie pound retail sales. That's it. Chinese GDP Friday, so not too much to worry about on the dollar. But yeah, let's see. And if we see some NZD, some bad data here tonight, then expect pound NZD to really move. Really move. So yeah, we'll keep an eye on that. But yeah, otherwise, not too much to worry about. Just keep an eye out for that pound in the morning. And that's it. Well, thanks for signing on. I'm going to get the recording up for everyone to view. And yeah, like I say, anytime, especially if you're on the charts, let's have a look and see what we can see together at some point. And trade safe. I hope that we get this bit of recovery in gold, so you can exit and you can get back short. Yeah, have a good evening.